So my name's Simon Brown. Fun Friday today with Standard Online Share Trading. I'm going to be talking around market makers, and in particular, how do we spot that market maker? How do we see them in the market, which is the point of the process, I suppose. If we're going to have a market maker, oftentimes the ability to see them is important. So I'm going to touch on that. And we'll do some live looking at screens and the like to get a sense. But market makers essentially in the market, in theory, all day, buying and selling on the JSE and buying and selling at fair value. There might be buyers in between. We'll look at that in a moment. Firstly, where do we find them? So we find them for what I'm going to call structured products. So exchange-traded funds, exchange-traded notes will have a market maker. Warrants as options will have market makers. Some notes, etc., will also have market makers. And the point is, we need to be able to spot them because we need to make sure that if we're buying, that they are the one we're buying from, so that we don't overpay. And we can use that in terms of limit orders. But what matters is take a fair value, and let's say something, whatever it is, not important. That fair value is 10 Rand. The market maker would be selling at 10 Rand and 5 cents. They would be buying at 9 Rand 95. So you've got a 10-cent spread there. Now, that is in essence, you're buying 5 cents for a fraction of a percent above a fair value. Now, that's cool. It's 0.01% above fair value because fair value was 10 Rand and you're buying at 10 Rand and 5 cents. The risk is if the market maker is not there and you end up buying at 10 Rand 50 or 11 Rand or something, and you've essentially overpaid for it. Now, the first question is, why wouldn't the market maker be there? So there are a couple of times. During the auction process, the opening auction and the closing auction, so before 9 in the morning and after 10 to 5 in the afternoon, there is no market maker because they can't practically work during an auction environment, so they're not there. If there's a volatility auction during the course of the day, again, market maker will step aside. What we do see, however, is that some market makers are better in a couple of ways. They're better in terms of always being there. Some of them seem to take tea breaks or coffee breaks or donut breaks or something, sometimes long lunch breaks, and the market maker then disappears. And that's an issue. They're just not there. And that's why it's important to be able to spot them. They might also have a system issue or something like that. So there will be some times where simply there isn't going to be a market maker. And then, if you're looking to buy or sell and there isn't a market maker, then the best advice is wait until there is. Absolutely wait until there is. So let's go and look at some examples of market makers. Get me to my white browser. And let's start with one that's deadly easy. This is a put warrant on Sasol, and the market maker is there in 3 places, buying at 31, 29, and 27, and selling at 32, 34, and 36. Now, this is a put warrant on Sasol. Standard Bank market maker will go and let me zoom this. Can I zoom a bit here, please, Brave? Brave doesn't want to zoom. What happens is, quite simply, is they take the price, they run it through their black skulls, they come with a fair buy and sell, and there they are. Now, this is easy to spot. What you're looking for in most cases is you're looking at the volume. Nice big round numbers in volume. Surprised by there we go. I was about to say I'm surprised by the 50,000 down there, but then suddenly they came in at a higher number. And that's probably linked to available in the underlying. But one of the things you're going to see from a market maker, and we're seeing it there with that bid volume at 31, is that the volumes will sometimes be changing in warrants and the prices will be changing. And then you can see price is staying the same, but the volume is rotating through. And that's probably linked to what is available from Sasol. Because obviously you need to be able to buy it. You want to go and hedge the position, so you've got to be able to get it from Sasol and effectively get your price into the market. Bear with me a second. This is my new favorite browser, but I don't know. There's my zoom button. There we go. That's better. Yeah, okay. So now we've got a much more in the screen. There it is. Now it is center in the screen. So in warrants, it's often quite easy to spot. Sometimes there's more activity there. But when we start moving, especially to ETFs, it gets a little harder to spot those market makers simply because there's a lot more activity there. Now, look, I've been doing this for a long time. So for me, I can see 3 market makers here. And one of them is that 50,000. And you would just have seen, as I was mentioning, they were at, there we go, and the price changed again to 51.59. They were at 57, they went 58, they went 59. They will be updating, there we go, and they've just gone 51.60. They will be updating their prices in real time. So as in this case, this is a Satrix 40, so they take the 40 shares that are making up this index, and they're computing a fair value, and they're essentially making sure that they're at it. And they will change in real time, keeping the volumes relatively the same, but they will certainly be changing their prices. Now, we saw that go from 57 to 58 to 59 and then to 60. But what I also want to show you is there's actually 3 market makers here. So there's that one market maker who's buying at 50,000, and there's their sell. And that's the one trick to market makers. They sit in nice round volumes, and their volumes won't change so much as their prices will. And now you can see their prices now gone to 61, and now they're at 62. So you've got one market maker who's doing volumes of 50,000, and you've got another one doing volumes of 25 and another one doing volumes of 15,000. And obviously, as I'm talking, the market is moving higher because the buyers are shifting up at the same time. So the point is that 3 market makers or is that one market maker? In the case of the warrant we looked at a moment ago, it was almost certainly one market maker with 3 price points. But there's nothing to stop somebody else making a market. Me or you, we could set up our little system, run a little Excel spreadsheet, get a number, get access to the JSE, and we could be making markets. So oftentimes that could be that's one market maker, say it's Satrix, and then there's 2 more. And truthfully, you don't mind. And the 2 others, the ones at 25 and 15,000, are less likely to get traded because there's, if I'm a seller, I'm going to hit those better prices first. But, sometimes maybe that market maker's off the market or something like that, in which case, well and good. Here's the other thing is, let's assume that Satrix at 51.60, 51.90 buy and sell. If you're selling, you can actually get a better price at 51.64. There's somebody else in the market at a better price, and you will get that better price if you trade. And what's important, same on the buy side. If you're looking to buy, a question came through on the buy side as well. There is a better price in the market, so what you will do is you will get that better price. However, if you want to sell more than 2,944, you will get some of them at the 51.64. And then you get the balance at 51.61. But what I'm suggesting is that don't do at markets. At markets in this environment. Rather do a limit. And what I'll do is I'll see Satrix at 51.61. So I'll say, cool, sell me 51.61. If I get the better price, I'm more than happy with that. Absolutely more than happy with that. And if I don't, and if it moves away from me, then I can cancel and resubmit the order, etc., etc. What we've also got happening here is, in essence, so the fair value here, so the spread on the 2 Satrix prices from 61 to 91 is 30 cents. So midpoint of that is, let's call 51.76 is the mid price. That is therefore the fair value. Now, the spread is therefore a cost. It costs you money. Costing you, let's pretend there was only Satrix in this environment, I'm paying away basically 31 cents to get it. So the spread also becomes a cost of buying. Now, it's a cost we can't avoid. Well, you could try and avoid it. So you could put a sell on here at 51.80 or 51.79, get ahead of the queue and hope that you get, that someone hits you. And Satrix, there's 5 million Rand gone through today, almost 100,000 in volume. You might well get traded. But you go look at Satrix 40, now there are a couple of different ETFs in the top 40 space. There's Ash 40, and there they are at 50,000 and 50,000. Their spread is slightly tighter. Their spread is 26 cents instead of the 30 from Satrix. Now, truthfully, Satrix has higher liquidity, so therefore you're going to get more people inside your spread, and therefore you might get a better deal. But if you're looking at less liquid ETFs and everything else is broadly the same, check those spreads. See which has the narrower spread. And truthfully, trade the one with the narrower spread. And I mean, obviously, total expense ratios come into account as well. But the essence being is, so I can buy basically the same thing at 51.67. Sorry, sell it at 51.67 to Ashburton, or I can sell it at 51.59. That's 8 cents. You know what? Ain't no one buying a Rolls Royce with 8 cents. But if there's 8 cents to be had and it's in my pocket or the issuer's pocket, I'd like it in my pocket. Thanks very much. What we're also seeing with the Ashburton, it's again, I don't know. So now it's a bit tricky. So certainly that 50,000, nice and easy. That's Ashburton trading. Are those two other market makers? Maybe. I think they're too far off the action. I think that's just other people who've got bids in. And the other reason why I think not is I'm not seeing them on the other side. Market makers buying and selling at the same time. So where are they? If those were two market makers, I would expect to see them on the sell side at the same time. The other important point, a question just came through. Takalani asked it. Takalani, not to worry. Takalani's question is, but if they're in front of me, then they're going to trade first. Well, if they're in front of you in terms of price, they will trade first. But remember, the JSE has a time price for orders. So in this case here, if Satrix now steps up to 51.62, that 2,945 will trade before Satrix's 50,000 because that 2,945 was there first. Now, Satrix steps up to 51.63, they get ahead of the price. And that actually, interestingly, that little 2944 looks like a market maker because they're also changing on the fly. So maybe it is, but it's a time price thing. And what you see is that because they're constantly taking and replacing orders, the market makers are typically at the back of the queue. This person here might be sitting a best bid by 3, which is a function which some brokers have. We don't have it at online share trading. But in essence, they're saying, always make me the front of the queue. You can see that example there at 51.57. There is 25,000 from a market maker and 900 from somebody else. That 900 will trade first. Now, not anymore because that 900 is now falling down the queue because the price is moving above their 51.57. I want to show you another one. This is New Gold. Now, there are market makers. There's ABSA at 80,000 and 80,000, another one at 20 and 20, and then there's another one at 100 and 100. But this is such a popular ETF that between their 559, there's actually a fair bit of volume ahead. Okay, not that giant, 2,381, but at a 285 price. I mean, that's a chunky amount. That's not insignificant. And ditto, where they're on the sell side, there is 25,000 volume ahead of them. And that, because New Gold is so actively traded, you're going to get a lot in between. You're going to get a lot of activity happening. If I go to a Ash Mid, there's still a lot of activity. I'm trying to think of what is like a ETF 5IT. Even here, there's just people everywhere I look, which is lacquer, but it does mean. But again, so where's our market maker here at 1128? And maybe that's them there. That's actually probably them there at 1130 and 1148 in 50,000 each. And the risk is that in a low liquid, so let's go back to this example as an example. So SBW, there's no one. So if this system suddenly breaks, you're going to trade poorly. If I go back to top SBZ, there's market maker at 13, 14, 15. But if that market maker suddenly disappears, you're going to be hitting 17, 26, and then 35. So you're going to be in trouble in that sense. And that's why you want to know where the market maker is. It's why it's important to be able to identify the market maker when you're trading in products with it. Now, and truthfully, in the case of Satrix 40, it's less of an issue. There's so much other activity happening here, but it's still something, whenever I'm buying, I'm always very, very cognizant, where is that market maker? And you'll notice Satrix is slightly wide. No, I like their spread is still 30 cents. And as you look for it and you get better at spotting it, you can just start to see them just easy. It's just one of those, it just pops up nice and simple. Here's Ashburton, the GEQ. The trick that they have, so there's their market maker, 54.92 and 55.66. Sometimes this market maker goes off, and if I now zoom out, you can see those price spikes. And those price spikes are on the chart are quite simply when market maker wasn't in town and someone came and did a trade, and that 62 Rand high at that particular point, and what are we there, 26th of June, is, I could be wrong, but I would say it's probably not trading against market maker. In other words, somebody has overpaid. Those sort of tails and spikes are invariably somebody has overpaid. And you don't want to be that person who's overpaying. There's a fair value here. There's a market maker. Let's make sure we get that market maker. What you'll notice, and I'm just going to pick Sasol as a random share, no market makers here. These are shares. Now, there might be bots, there might be all sorts of bits and pieces, but there's no market maker in the classic sense of a market maker. Michael, you only have one line of data on the market depth screen. That's because you are level 1 in that case, in which case you either need to sort of be trusting, I suppose, or quite frankly, so level 1, which is gives you just one line, and then I'm sitting on a level 5 here. And let me just go to the viewpoint iris screen and I'll show you the details. Fred, I will do. I'll come back to those in a second while that is loading. So market makers, and they will be employed. So let's use Satrix as an example. Satrix has got a number of ETFs on the market, and what they will effectively do is they will employ somebody to be a market maker for them. Now that person, it could be an outside party. It could be Sanlam stockbrokers because they're part of Sanlam, Sanlam Private Investments, whoever. They will get a third party to essentially run that market making process for them. And part of that spread is part of their profits in the equation. If the fair value is 10 Rand and they're buying at 995, they're buying slightly under 10 Rand. Now, there's also spreads on the shares that they're buying, so it's not as simple as just a case of, boom, they've just pocketed that 5 cents. Maybe they pocketed a cent. And of course, the market maker is incurring costs. They've done a transaction. And of course, the market maker, wants to make some profits from their process as well. We're going to see them exchange traded funds. We're going to see them in warrants, and we're going to see them in notes, although there's very few notes at this moment. Kenneth, I invest only on the market rather than trade, only buy and sell, so I've not registered for Viewpoint. Is it necessary? Kenneth, no, it's not. You raise a great point, and I will show you why it's not necessary, because we can broadly see the same information when we just go to online share trading, and I'm going to come back to that because I'm now following for Michael. So Michael, there's different levels. Basic and level 1 gives you market depth of 1. I'm on level 5, which is market depth of 5, which gives me that extra depth. It cost me an extra $20 a month, and I'm like, cool, happy with that. If you're on the delayed free, then it's market depth and you only get the top level. But I'm paying that extra $20 a month. Kenneth, to your point, nope, you do not need, because you can see it here. So this isn't live real time, but what you can see is, there's the market maker, 51.60 and selling at 51.90. Now you're going to put a sell order in, or maybe let's say you're going to put a buy order in. So what you do is you say, look, buy me at, so what I do, let me stress that part. Partly because I'm lazy. I say I want to buy at 51.90, and I would say make it 51.92. Because what I'm worried about is I submit the order and the market maker moves to 93 or 91 rather, and I don't then get the trade, and then I've got to cancel it and resubmit it, etc., etc. But you can see where that market maker is here. This is not updating in real time, but we can still see where the market maker is. So you don't need the Viewpoint if you're just doing, as you say, you're doing the long term, so it's less important. Yeah, so, I mean, folks, what is the quiet... I know where we will find Maurice's ones are now, I can't remember, exchange traded funds. So Maurice runs the Cloud Atlas, and they've got the Africa ones. I think it's AM. What are those share codes? AM IB50 and IRE. AM IB50. Even here. So in this case here, you're seeing much smaller size in the market maker, and that's because Maurice, who runs this is Cloud Atlas, he's having to really struggle to get the shares that make up this. This is the 50 biggest African companies, excluding South Africa, listed companies. So he struggles. So even here, I mean, that might be, but I suspect not. I think there's your market maker, there's your market maker, and there's your market maker. Although, no, that's really, really far away and probably there. So significantly less liquid and therefore a lot less activity. William, you can choose live prices on OST. You absolutely can. It's still just going to give you a snapshot. And what you can do is, as you go in, so back to the Satrix 40, you will note I'm default to live, but most of you would default to delayed. Because I've got Viewpoint, I don't pay for live prices on the website. I've paid a monthly fee and I can basically get as much as I want. But if you've got the delayed, you can click to live. It's still just going to give you, the key difference is it is static. And interestingly, look how that has moved. Where a moment ago, they were at 51.90 and they were second in line. Now they're 51.88, but there's a lot ahead of them suddenly. That 2945 is still running around there. And there's someone here wanting to buy 900 at 51.57. Yeah, so I mean, the question coming through, you know, is surely they should be there at all times. Absolutely, they should. But you know, I mean, truthfully, stuff happens. I mean, we can debate whether they should have redundancy plans, etc. But stuff happens, and sometimes the market maker is simply not. Here we go. The 900 at 51.57 is now sort of second in queue. A lot of activity happening here, but not a lot of trade necessarily happening. If we zoom out a bit, there's been two trades while we've been, two trades, 32 and 35, both 51.66 and then a 51.67. Ladies and gents, that's me. If you've got some questions, pop them in. We've got a couple more minutes left. We can take it. Miro, do you need live prices? In my example, why would you buy at the market maker's price and not at the lowest price? So do you need live prices? Actually, no, good point. You don't, because you can still spot market maker. And my concern is that I get traded out at a bad price. But even here, so this is now a delayed price. So this price is, no, and it's not going to show delayed, is it? Because I'm on live throughout. It's not. But pretend this is a 15-minute delayed price. You can still get a sense of where that market maker is. And Miro, your second part, an example, why would you buy at the market maker price and not the best price? You would buy at the best price. So in this case, there's one at 51.78 and 87, and you would trade against those two prices long before you traded at the market maker at 88. The question is if you want volume of more than that 2,073 that is available. So if you wanted 3,000, to buy, then you would take out the 1006, the 1067, and then you would take part of the 50,000 on offer. Fred, I'm going to bounce you to the video. It will be up as soon as we're done. You'll find that on the YouTube page. Buying or selling at market versus limit. And that's the point. So buying at market basically says, buy me, I don't care the price. And that can be risky, particularly if market makers suddenly disappear in a low liquid environment and suddenly you hit a crazy price. And that's more applicable to the less liquids, such as, for example, this Ashburton, where it's not too bad at the moment, but you can see 55.62. If you miss the market maker, you're going to pay an extra 40 odd cents, no extra 60 odd. But then suddenly you're at 57, then suddenly you're at 59.90, and then 50.999. So in this less liquid, it becomes an issue. And that's why when I'm trading these sort of products, I'm always doing limit orders, which says buy up to but not above this price, or sell down to but not below that price. Ladies and gents, questions are done. It seems questions are done, and we will let's wrap it and record it. You'll find us on YouTube. So what I'm doing at the moment, and I'm still just testing it, but I'm streaming these live to YouTube at the same time. So we've actually got some people live on YouTube. You can comment. I'm monitoring comments there, etc. And the tech seems to be working lovely. So you can catch it on YouTube as well as via the GoToWebinar. And of course, the videos are on YouTube. The difference is now is that within minutes of me finishing, the video is available on our YouTube page. Go to YouTube, search Standard Online Share Trading. And legal disclaimers, of course. Nope, too far forward. Sure thing, advantages. So the difference between level 1 and level 5 is that level 1, you would only see that top line of buyers and sellers. Whereas at level 5, I get all the depth. So that's your key difference. It's just, it's just showing you more buyers and more sellers. And in fact, I've got complete depth. So there's someone down there, the low is buying at 42 ZAR for 1,000 of them. So yeah, and that comes to, it's $20 a month, which is, it's not a lot, but let's be honest, it's also not nothing. So the question you've got to ask yourself is, do you need it? Now, do I need it? The honest answer is probably I need it when I'm trading my Aussie, because on my Aussie I need to see all of my depth, and it shows you all the depth in the world. So certainly I need it in that space. And the other, it's probably not the most important thing in the world. I like to see depth. It gives me a sense, particularly, let's have a look at what quantum is doing today. Depth gives you a sense of the activity and how strong it is. Here we can see with quantum is that the buyers are spread thin and the sellers are starting to stack up to a degree. George, Market Maker is live. Absolutely. Updating in real time. If we quickly go back to that Satrix 40, you will, if you watch that 50,000 price, you will see it moving as and when the changes are happening. And there's your other one there. So yep, they're happening in real time. And that 2943 is obviously a bot of sort, because it hasn't changed volume, but it has moved around a whole lot. Mike, perfect. Yep. In fact, I record straight after this. Will be Business Day TVing later this evening. Ladies and gents, we shall park that there. Appreciate everybody's time. You all have a good day further, a good weekend. It's going to be bitterly cold. I suppose that's what winter's about. But everyone, have a great day further. Cheers all.